Okay, guys, good morning. Welcome back to another session of trade analysis. This morning, we're going to look at gold. Like I promised us, my students, I told you that we shall be looking at gold throughout the month. In the month of July, we are going to be analyzing gold alone. Okay, we're going to focus on one instrument and then see how best you can trade the instrument. So, guys, first of all, you know that before you look at any trade for the day, you have to come and visit forexfactory.com to see whether there is going to be any impending news that can impact on your trading pair. Okay, and you know we're trading AU, we're trading AXU USD, that is gold. All right, we're trading gold, so XAU USD. Okay. So you have to know what is happening in the USD economy, okay, and that's why we have to come to Forex Factory. So when you look at Forex Factory, you will see that by 1:30 p.m. Nigerian time, we are going to have the consumer price index month to month, news that is going to come out, okay, and so this is very important. You look at what is going to happen from the fundamental side of the market, okay? And so apart from that, there's no other threatening news that could affect that commodity, okay? All right, so guys, let's go back. Let's look at the technicals. Okay, technicals are very, very key. I'm a technical trader, so I look at the technicals very, very intensively. Okay, so guys, what I did was that yesterday I told us that I'm going to short gold, okay? I short gold after I saw this momentum candle. I waited for a confirmation candle to break structure, to break the structure of the momentum candle. But unfortunately, when this candle printed, when the second candle printed, it was unable to close above the high of the previous momentum candle. So I knew that. So I suspected that there's no break of structure and that the market was going to push down, okay? Now, what happened the following day, I saw the market push up, okay, with this another momentum candle pushing up, yet it did not break structure, okay? Now, thereafter, another candle came and broke structure, which is this pin bar, okay? So when I saw the pin bar break of structure, I knew that there was going to be a reversal in the market. Okay, guys, give me 1 minute. Just give me 1 minute, guys. So guys, sorry, I have to attend to my colleague. Okay, so what I said we're looking at here is that we're looking at this candlestick here, how it is impacting the market. Okay. So now, when I saw this pin bar here, I knew that the market was going to push down very aggressively because this is a qualified pin bar forming that structure 200 period moving average, simple moving average. Okay, so I took a short position again. Now, those of us that were hunted at yesterday, I advised us to re-enter the market again. That's what the smart money want to do. The smart money want to take out all the retail traders who have placed their stop above the 200 moving average, and when they take you out, they go back into your direction, okay? Now, so that's one aspect of the technical. Another aspect of the technical I'm looking at here is the ABCD structure, okay? Let me tell you what I mean here, okay? Now, this is my one leg of the impulsive move, okay? All right, this is another, that is the AB, then this is the C, okay? And this is going to be the D, okay? It's going to be the D, okay? Down to structure, okay? Down to structure, okay? So I expect the market to move in this Elliott wave pattern, okay? Now, when that happens, is that I expect that this market should push down to come and create another entry point at D, so that we can take a long position here, okay? So, guys, these are my views about this market, and I expect it to play out very well. Okay. Now let's look at the previous price action that happened. Okay. Now when I saw this pin bar here, I knew that this market was going to push up. However, I didn't see this pin bar early enough. I saw it when the market had moved beyond the discounted price. So it was no longer profitable for me to enter the market at that point. So I waited for another opportunity. Guys, do not enter the market when you have not seen a high probability trade setup. Okay? Always be patient. Do not allow FOMO to affect you when you're trading. That is fear of missing out. You don't allow that negative psychological factor to impact your trading decision. Okay? If you didn't catch the market early enough, don't worry. Wait for the market to come back to another opportunity level, and you pull the trigger. Okay. So the market is not running away. The market is there all the time. If you miss one opportunity, one trading opportunity, wait. Another trading opportunity will come, and you take your trade. Okay. So don't be in a hurry. If you must be a good trader, I mean, if you have to be a good trader, you must be very, very patient. You must be very, very patient with the market. Do not rush into the market. Do not run after the market. Allow price to come to you, okay? Don't run after price. All right, so guys, these are some of the tidbits I'm going to give. I've given out this morning. These are very good characteristics of good forex traders. So you must be able to be composed when you are trading in forex. You have to be very composed. You have to be very stable in your psychology. Okay, don't allow any external factor. Don't allow the price to influence you to do the wrong thing. Wait for price to come into your position. Okay. So guys, additionally, the other thing I did here was that I pulled out my Fibonacci retracement tool. Now, if you look at what is happening, you see that this market is actually in a downtrend. Of the overall market structure here is a downtrend. Okay, we can call this a retracement. This is a pullback. Okay, this is a pullback. All right. So now, another angle that you can look at this market is that an uptrend has started here. Okay, but if you look at here, you see that there's a clear break of structure. There's a clear break of structure here. If you look at the left-hand side, you see that this is a swing high, okay? This is another swing high, okay? So there's a clear break of structure from here up to this point. The market has broken some structure level on the left-hand side, okay? So now you can technically say that this market has resumed an uptrend. So if that be the case, you can trade a counter trend. You can trade a counter trend. Okay, so the market is very dynamic, guys. Market is very dynamic. So if you have to be, I mean, if you're a good technical analyst, you must also be dynamic. Okay, because the market you are trading, price itself is dynamic. So you need to have a dynamic, you have to put on your dynamic lenses, okay, to be able to see the dynamic structure the market is printing, okay? So now, when you look at what the market is currently doing, now you see that we're going to trade a counter trade, okay? That's a minor structure, okay? We're going to trade a counter trade. But if you look at it from the technical point of view as well, you see that price is currently below the 200 simple moving average. What that tells me is that this market is in a bear that this market is in a downtrend, okay? Overall, looking at it from the 4-hour time frame, this market is in a what? Is in a downtrend, okay? So now we're looking at trading this market, to the downside, okay? So what I did was that I said, okay, if this were going to be a pullback, okay, it should pull back into structure. So what I did was that I used my Fibonacci retracement to gauge to what extent this retracement will go, and that's where my take profit target is, okay, at the 61.8 Fibonacci level, okay. So I place my take profit before the 61.8 Fibonacci level, okay, and that's how I place my take profit. Now, how did I place my stop loss? Now, my stop loss was placed 1.5 of ATR, okay, 1.5 of the ATR price level. That's where I placed my stop loss. So what that tells me is that I've given this market, this trade enough room to breathe, okay? I've placed my stop loss some technical levels above the average true range, okay, of price. So what that means is that I've given this market enough room to breathe, okay? So how you do that is that you go to your ATR, indicator, okay, or your technical indicator, you go to the average true range is an oscillator indicator, average true range, okay? Now when you come here, you pick this level. Remember you're trading gold, okay? Most brokers place gold at 2 decimal points, okay? So what this tells me is that this market has done an average range of 200 and 621 pips, okay? Has done an average of 621 pips. So that means taking this to 2 decimal places will give me 6.21. Okay, so that technically speaking, it's 621 pips. Okay, that's the average true rate for this market. So guys, you need to know all these things. If you need more training or more mentorship, okay, just come to my academy. Go to YouTube and search for FX Zingo FX Academy. You see my YouTube channel there, and you go through the trade analysis I've done. You learn how we do all these technical calculations. Okay, so guys, that's how you handle your average true rate. So when you pick this value, you multiply it by 1.5. Okay, then whatever is the PIP, you add it to your entry price to give you your stop loss target. Okay, for your take profit target, just take it to the next technical structure level, okay? And here I use the Fibonacci retracement of 61.8% to place my take profit, okay? So guys, this is how we do it here, okay? So that's my view about gold. We're going to continue to monitor this market, fingers crossed. I hope by the end of the day we should see some reasonable price action in the direction of our trade. Okay. So guys, thank you very much for your time, and we have tried as much as possible to analyze this market, to the best of our ability. Okay, the market can decide to do anything it wants to do. We are not in a position to redirect the market. However, we use our technical expertise, okay, to predict, with high accuracy, with high probability, how this market is going to move. Okay. So guys, thank you very much. That's all I have for you today. Till we see again, it is bye-bye.